Hi guys, welcome to another video. So today we'll talk about the rest of this year, which 3 countries should we invest in to better capture the return and capture the profits in the last years of the bull market. So there are a few reasons and few criteria that how we define good countries to invest in, right? So I will define what I'm looking for and then which country best matches the criteria that I've listed. So before that, if you're new to my channel, please subscribe to my YouTube channel and my Facebook page, and then I will be posting the videos and you will be one of the first ones to see our most updated videos. And please comment, like and share as you have any questions or anything that I can talk about and share with you guys. And the first criteria is about growth, okay? So finding a country in the next half year or maybe in the next year or so that have a really strong growth. It's just like a stock like Amazon and Tesla. Tesla is not a growth stock, but Amazon and Google, it will be stable and also with significant growth. Which country is that? It's UK. Alright, so you're wondering why UK, right? Because there are 2 reasons why we think that there's a significant growth in the rest of the year. Because first of all, people are really scared and afraid of the Brexit. The policies, will they work? Will the September, the Germany presidential election, will there any negative news against the UK, right? Because if they're staying in the Eurozone, they probably all will be going against the UK, okay? But because of that, the valuation will be pretty low, okay? The second reason is because fundamentally, they're still the second largest economy in the Eurozone area, okay? So the growth is pretty strong. And their economy, their purchasing power, and also their style of doing business and spending is very strong. Actually, there's a third reason. By looking at the chart, you will see that the index of UK has been broken above the triple bottom, so it's historic high. After that, technically, the sky is the limit. So, might as well we have a chance to do that, right? Because we're not putting 100% of cash in that ETF, right? But it's really a country. It's not a stock, it's a country. It's pretty stable. So I'm not doing any growth estimation, right? I'm just going to the Bloomberg and just copy globally estimates all over the world. So what do they say? For 12 months, the growth is 114%. It's just like a stock. So there's no other major countries can go against the UK. Okay, so how should we invest in it? Of course, there's pension funds, and also ETFs. Because I've talked about 4 tools that for an amateur to practice, right? Before you invest in the stocks, ETF is one of the best options, okay? So in terms of volumes and turnover, EWU, which is iShares MSCI United Kingdom ETF, is the best option in terms of volume. Because without volume, then you cannot really trade that ETF and the price will not be correctly reflected the valuation, okay? So just out of the research, just out of curiosity, we will also do a correlation against FKU, DXPS, and also QGBR, alright? Anyhow, the correlation of those are a bit higher than EWU, but because of the assets and the volume is lower than EWU. Anyway, we'll choose the safest one, which is EWU. So you do not expect any leverage in that, okay? It's just tracking the index itself. So right now it's around $33 to $35 per share. Then it's buying UK for 99.37%, and the rest is holding cash and derivatives. Why is that? Because if you allow a fund and ETF to purchase in derivatives, and they can better have a wider range and options to track the index. So just by spending a little bit in derivatives is basically okay? The second one is about the value. It's about the asset value, okay? That means even if that country is not doing good in terms of earnings, and just simply because of the currency going strong and the assets is going strong, then we can already kick in and invest in that value. Just like buying a gold mining company, okay? If there's a certain amount of gold in the mine, then you just pay that money to buy the mine, plus some premium, of course, right? That's easiest valuation all time to do that. So whenever there's a country or even stock that is having a significant growth in the asset value, the valuation is pretty much accurate, okay? That is China. Because why? In the past few years, no, in the past decades, okay, countries all over the world really want the renminbi, the currency of China, to go weaker because the manufacturing, the export is pretty hard for the export to grow if the renminbi is really cheap, right? But then China will fuse the currency to go strong, right? But the fact is, every country manipulates the currency. But of course, I admit the Chinese manipulate the currency way better, or even way much more than other countries. But anyway, but now we can see that after a few years of the currency depreciation, the Chinese economy is doing really good, the export is really good, and the minings and the resources will all sent out to India, Malaysia, and Singapore. Then now they're earning a big time. Okay, now Donald Trump becomes a president of the United States. He is officially say that if there's no improvement in the currency, he will list the China as a country who manipulate currency, okay? So now, President Xi from the China noticed that apparently the renminbi goes stronger and stronger and stronger. Statistically, in the summer, like June, July, August, and also September, the chance of renminbi going stronger is more than 70%, okay? So when the currency goes stronger, the asset will become higher, the asset value will become higher automatically, even it's not earning much more than last year, okay? So in the Bloomberg estimate, book value per share is growing by 14%. 14% estimate in the 12 months. So the ETFs you can buy, of course you can search it in ETFs DB. There are two ETFs that has biggest volume and largest total assets, okay? The first one, the biggest one is FXI, okay? It is iShare China Large Cap ETF. That is something that is not tracking the index, the Shanghai Composite Index exactly, but you can play around with that. But because if you believe the currency is going stronger, buying large cap is the best option. So you can try that out. The second biggest volume and total assets is MCHI, is the iShares MSCI China ETF. If you don't know that the MSCI index is probably the hottest topic in China, that Chinese stocks is going to be listed and selected to be representing in the MSCI index, right? So if you believe in this news or speculate this news, something like that, you can consider this ETF as an option. So right, changing the angle because I didn't bring my crew to Canada, okay, so I'll do the camera and setting and upload, stuff like that. So you see the camera will not be as sharp as before. So that's really good because I don't want to have better skills than my staff, and otherwise they do not have the job, right? Anyway, it's pretty chill environment. I'll announce the third country that I believe is something that you shouldn't miss in the rest of this year. So the third one is because of the currency itself. So as you know that hot money or currency loves interest, okay? Whenever there are high interest or expected to be high interest, the money will flow into that country. So we'll be looking for a country that has a higher chance to raise the interest rate. Okay, so we'll do an expected value of interest rate hike. So what does that mean? So if a country is going to raise the interest rate for 1% and the chance is 50%, then the expected value of interest rate hike is 0.5%. So with this calculation done, that is not US. The country that I'm talking about is Canada, where I'm standing right here in the ground, in this Canada soil, okay? So the expected probability of hike is 28% in September, okay, for raising the interest rate for one time. But if they're not raising the interest rate by the end of the year, it's going up to 67%. And also, 16% of them were saying that if you don't raise the interest rate now, by the end of the year, you will raise it 2 times, like 50 basis points, okay? So not 25 basis points. So pretty crazy, right? So as you can see, people from the rich people from China is going to Canada more than even going to UK. So the first one is still US, right? So with that in mind, even the home capital things and the housing market is going down a little bit. I don't think they really care that much. And also the Canadian dollar is rebounding really strongly. I'm not saying that you should buy it now, but in the rest of the year is something that you should consider. So the only ETF that the correlation is the highest and the volume is considerably stable is EWC. The price is around $27 per share now, and 99.76 is buying Canada, and only 0.24 is investing in US itself. So there are 3 indices and countries that you should probably consider to invest in before the end of this year. So hopefully our portfolio will have a steady growth, and if I'm right, the bull market earliest will end in 1 or 2 years. We really have to consider what we should invest in the last phase of the bull market, and then it's the bear market again. So if you don't understand why I'm talking about this and the proof about this, so you can watch my previous videos. So one of those that have most views will be most likely talking about the housing market or the bull and bear economy and the economic cycle. Okay, so please like and share to your friends. If you have any questions, please leave me comments, and then you know that I'll reply you one by one, and just any suggestion that you want me to share and analyze, that's okay. Leave me a comment. So investing made easy. I'll see you next time. Goodbye.